I have a few different tokens. My main bets are Ethereum and Solana. But like Mooch, I have no idea whether Solana is going to be something or not. I think it probably is because the network adoption seems to be as high as anything else, but the world can change fast. So, outside of that, I have a basket of equally weighted stuff because I assume I'm an idiot and don't know how to choose the right things. So I've got that. And then that's why I set up a fund of hedge funds, because I'd rather give my money to a bunch of people whose job is to go and find what is the next 100x or 1000x than try and do it myself, because it's complicated. So I started an asset management company to do that. And the rest is a couple of concentrated bets and then just a small basket of stuff, just to keep my eye on it all, see what's moving, see how it works.
And what is the 5 years, the grandest vision? If all of this works out, we come out of this bear market, we start to see, and 5 years is too short, 10 years, we'll say. What does this all look like, right? I mean,
I think we have no idea, so we can just invent things and make it sound cool. We have just no idea. What I do know is if I just extrapolate the network adoption effects, the number of users and where that number of users is going, and assume it gets to somewhere between 4 and 5 billion in the next 10 years or so, which would be central bank digital currencies enabling it, all ticketing, a whole bunch of stuff going that way. Well, the market cap of the space goes from whatever it is today, $1 trillion, to $200 trillion. Okay, we kind of throw out these numbers. People don't realize the world has never seen an accumulation of wealth like that in history. I mean, this would be the shortest period of time of the largest accumulation of wealth ever seen. So even if I'm wrong, let's say I'm a total moron and I'm wrong by 90%. Well, 20 trillion, 1 trillion, I'll still take that bet because it's still the best bet in the world. And that's by me being wrong by 90%. From my perspective is just to go back on the broader topic, and I'll come into the charts and stuff, I think the macro was the big thing that actually caught most of us by surprise. Not that the macro caught us by surprise, but the impact it has on crypto. Firstly, when you have negative real wages, people have less money to dollar cost average. It's still a retail investment market. And so then the other thing is central bank liquidity being withdrawn. And, if you look at the year-on-year chart of M2 against Bitcoin, they're basically the same thing. So it tells you that as money's coming out of the system, there's less money around. So as you and I know, Mark, from macro from all these years, that's when you figure out who's swimming without any shorts on, is that moment when there's no liquidity, somebody can't pay for the liquidity that they've been borrowing, right? So that's age old. It happened in crypto this time more than it did in traditional markets. Fine. So that, I think, was the setup. So inflation plus liquidity. So where are we now? We're in a situation where inflation has most likely peaked. From my work, I think inflation comes down very fast. So that fear narrative is gone. And that was holding back crypto. And so you take that away and the beach ball can start rising out of the water. Yeah. Then on the other side is liquidity. If we start looking at what the bond market is telling us, it's starting to tell us that the Fed are going to pivot at some point. Now, the market's still debating this massively, when it is and how. I'm in the camp that it happens faster than people expect and more aggressively, because I think the recession is coming harder. So therefore, future liquidity is coming up. We're already seeing liquidity coming out of China, which has been a lead in this whole cycle. So therefore, the macro structure looks good. And with the technicals, I had demarc signals. Everything was in that kind of June low period. So it kind of really stacked up for me. And I kind of went, trying to find any penny I had to put it back into the market. I hadn't taken any out, but it was just putting fresh capital in because you want to get in at those low levels. So now we're going into this area of congestion, as you say, Mark, which is whether it's the ETH kind of 2,000 to 2,300 level, or whether Bitcoin, the 24,000 level. And we need to clear that. Bitcoin's been sluggish, but that's okay. It doesn't have to catapult off the low. ETH's obviously got the narrative behind it. Yeah. So I look at how the market is structured, the price charts. I think there's a broader downward sloping wedge that comes in at 23,000 2300 in ETH. I'm mainly focused on ETH. 2300 in ETH. I think we go and kiss that line. We haven't had 3 touches of the line yet, so normally it pulls back into the range and then goes. So to me, it's kind of like, as Arthur Hayes wrote, is I think everybody's underweight the merge still. Yeah. People will get into the merge or post-merge, we'll get this spike, we probably get a pullback. A lot of people will say, see, it's going back to the low. My guess is it corrects sideways, does something, or back into the range for a bit, and then we explode higher. So I'm very bullish right now. You know, short term, we're getting close to the overbought, but I think we've just had a correction. My guess is we go again. What's fascinating is to see the forwards markets and the futures markets is everybody's hedging ETH merge risk. So they're buying ETH, selling the futures. Now, somebody's going to have to lift that hedge off at some point. Now, it depends. And so I find that setup really interesting. And I know the crypto hedge funds are all underweight still because they got beaten up so badly. And so they've been buying calls as the way of having something on for the merge so they didn't get beaten up by their investors. So it's like, when you see that kind of setup, the path of pain is still higher.
Yeah, although I do worry about the, buy the rumor, sell the news risk.
For sure.
And I think everyone believes, and I mean everyone, believes that the merge is good. NEI 15, 59, 15, whatever the number is, I can't remember, is all good. I can make some cases on the other side. And I think when everyone's on one side of the boat, to your point, they're all increasing long. Now, some are shorting that level, but I don't know. I'm not there yet. So I have refrained from backing up the truck in ETH. I think the move from 900 to 2,000 was kind of the move for now. And I think we're going to have to settle before we go higher. I know there are a lot of people, 10,000 by the end of the year.
Yeah, no,
that's aggressive.
I'm of a similar camp. I do think it goes a bit higher to the 2,300 level, 2,200 level. And then I expect a pullback, whether that's pre-merge, post-merge, I don't know. I don't really care, to be honest. It's kind of like, what are we setting up here? We're setting up something very interesting, which is a yielding asset that can be the benchmark rate for all of Web3. So I kind of think over time it's going to bring in a lot of institutional interest. I think, forget this narrative of true believers versus investors. The big breakthrough of what crypto does is the incentive-based program of you can participate in the network and make money and still believe in it, right? So it doesn't matter. You don't have to be that Bitcoin libertarian who wants to fight for total privacy and total freedom. It's not relevant. It is to them, and that's their fight. That's fine, right? Everybody has a different reason. But what I'm seeing is massive corporate adoption. I don't think anybody realizes Ticketmaster have distributed 10 million NFTs. Right, all of tickets are going on to Web3. Everything. So if we want to talk about how to get to the next 100 million, it'll happen at paces we don't yet understand. There are many of these Web3 projects of corporates that we don't even know about that have put millions of people into this economy. And once you're in, you've got the wallet. Once you're in, you start thinking, okay, what else is this? What can I do? And it comes. You see, money and making money is not a use case for everybody. It's a use case for people who want to invest and want to make money out of it. But the enabling of blockchain technology at scale is something we won't even notice. I mean, there's some amazing wallets like Vatum who don't even know what blockchain your tokens are on. It doesn't matter, right? So you don't do this, long string, all of this. You drag and drop, and it can be Solana, it could be ETH, it could be anything, and it works. It's like, and then it won't become that because then I go to a concert, I get a ticket, my ticket goes into my wallet, that becomes a memento. It may give me unlock to other access, something else. So there's so much coming. So the next billion people are not going to be buying Bitcoin, and because
Right,
they're
so-
not used to volatility of this scale, right?
Right.
But volatility gives the reward, right?
Right.
So because it's a 70 vol asset, gives these 20, 50, 100x, depending what time period you're looking at. And people just are not set up for that because they are mean reversionists. They think the world is cyclical and everything reverts back to where it was. So therefore, every boom has a bust and every bust brings it back to where it started. But that's not what happens here. It's in an exponential trend. So every bust is significantly higher. I mean, Bitcoin 4,000, Bitcoin 20,000. Okay. And that's low to low. I mean, that's extraordinary. But people don't see that. They're not used to it. They don't know how to deal with it. So people are having to learn. I mean, all of us did. I mean, I was shit at doing this because I never realized how in an exponential trend, buying and holding and adding into the big sell-offs is better. I went back and looked at all the times I traded Bitcoin from 2013 when I first got in at 200. I rode it up to, it went up to 2,000 to 1,000. So it went up 5x in 2 months. It went all the way back down 85%. I just held it because I wanted to treat it like an option. I wanted to see, and I had a 10-year view. And I said, listen, it's probably going to 100,000, worst case, 1 million, best case, over the next 10 to 20 years. So I held it, it went back 85%, it rallied all the way back up, and I got out during the forking wars in 2018, 17, and I'd made 10 times my money and thought I was a genius. It went up another 10x and then came back down again, so it was fine. I went back, and then I rebought in 2020 in that sell-off. I went back and did the maths on my much smaller position that I started with versus the much bigger when I really went in, irresponsibly long in 2020. If I'd have just held my original stake, I'd have made 5 times as much money by not. And I traded it well. I made money every time. And if I'd have just held it, I'd have made 5x. If I'd have just doubled, just keep adding my original stake every time it sold off in the big cycles and got down to that 5-year moving average, I'd have made 20.